Run us through some of the stats.
Yeah, I mean, it's remarkable, Nara. On a day yesterday when the average S&P 500 stock dropped 0.5%, the Nasdaq 100 gains nearly 3%, its best gain since April. Now, if you look at this momentum measure of the Nasdaq and its 100-day moving average, it surges to the biggest gap between the two since an ominous echo in history. The last time the gap was this large was at the peak of the dot-com bubble in March of 2000. Now, no doubt that this was led by Amazon, surging 7% yesterday, thanks to some promising trends in e-commerce. But look, Nara, the gains haven't always been even. Last week, much of the FANG block fell about 5.5%, and that means that volatility has also surged for the Nasdaq versus the S&P measure of the VIX. And you can see that back when we had that March sell-off, relative to the VIX, the Nasdaq volatility measure was pretty low. It was almost seen as a port in the storm because these companies could produce growth. Now, the fear is, and part of the reason why that volatility is ticking higher, is that with the economy looking to get back on track, perhaps value can come back. Those companies can bring earnings back into the fore, and that would, of course, be at the on the other hand, that means that momentum would start to fall and value does well, and these growth tech stocks can't maintain their shine, Nara.
Yeah, what's interesting, Dani, is it was quite a painful week comparatively for the Nasdaq last week. And some people were attributing that to the fact that we had some good news come through from the virus. But we've also had that this week, good news from the virus, yet we hit another record high on the Nasdaq. So does that really confirm that this rally is much more about momentum rather than fundamentals?
Nara, it's very possible, because if you look at those losses last week, part of it might have been because tech was so high that people say, okay, now is the time to go ahead and take profits. But of course, we've sort of emerged back into the world of TINA. According to Bernstein, the best fixed income trade once again is equities. So if you emerge into a week where tech has started to sell off, you want to get back into the index, and keep in mind about 30–40% of the index are these tech heavyweights. Perhaps it makes sense to step in and buy, which, to your point, Nara, is more of a technical trade than a fundamental one.